It was quite an interesting panel. Thanks very much. One of the new discoveries toward crypto technologies is stablecoins. Stablecoins are instruments that have price stability characteristics as a unit of account and store of value, often pegged to a national currency or commodity. The panel weighs on the current stablecoin market and its potential for the near future. Let's welcome Sinan Koç from BiLira and Gregory Klumov from Stasis.
Hello, everyone. So my name is Sinan, and I'm the co-founder of BiLira, a Turkish lira-backed stablecoin. And we also have Greg, who is the founder of Stasis, the largest euro-backed stablecoin. So blockchain is creating a new messaging system, alternative to the banks. And first it started with Bitcoin, where people allowed to transfer value on a new decentralized code. And after that, in 2015, Ethereum came together and it allowed to do if functions on this new decentralized messaging system. And while people were interacting with it, cryptos are very volatile. So Bitcoin and Ethereum can go up or down 10% each day. So they decided that they needed something, a token pegged to the fiat currencies, to be able to take advantage of this new blockchain infrastructure, but don't get exposed to the volatility. So everything started with a dollar-backed stablecoin, and how the process works is someone puts the actual dollars to a bank and then creates representation tokens for it. And Tether was the first dollar-backed stablecoin, and after USDC was released, and they're currently both on the Ethereum blockchain and different layer one protocols. And as the stablecoins gained use cases and value, different type of non-USD stablecoins started emerging. And Greg started the Euro-backed stablecoin, which is the largest player in the Euro space. And afterwards, we started a Turkish lira-backed stablecoin, going to more emerging country currencies. So the couple use cases we have is we serve as a fiat on-ramp and off-ramp for global exchanges, and also as a gateway to DeFi applications. So yeah, Greg, do you want to take it a bit as well?
Yeah, sure. So initial use case, as you correctly suggested, was the crypto trading, which allows some sort of the cash derivative to live on chain in the same environment and as other digital assets. So what it does, it provides a safe cushion for traders to go into cash terms. So when you trade volatile assets, sometimes you want to decrease your exposure to them because you anticipate lower prices, or you just want to reduce the volatility of your portfolio, and then you need an asset that has the same settlement characteristics as digital assets. It has to live in the same environment, so to say. So that's why initial use case was the cash equivalent for the crypto trading world, which later evolved into the arbitrage opportunity and arbitrage asset, because last couple of years there were a burst of crypto exchanges, centralized crypto exchanges popping up here and there, and most of them didn't have fiat components, fiat rails. So they used stable coins as a medium of exchange between themselves and as a cash on-chain instrument. And then obviously there were price discrepancies, because at some exchange Bitcoin could experience unusual demand, while at other exchange there is increased supply, and the price fluctuated between those two. So traders stepped in and took over and exploited these opportunities. And while they were moving assets between crypto exchanges, they used stable coins for that, because you don't want your asset to appreciate or depreciate much while you move it between the trading venues. And then after these crypto use cases were exhausted to some extent and the competition increased, stablecoins tried to push into the traditional markets. For example, we had a couple working projects and MVPs for big corporations to introduce a settlement solution for them, internal settlement solution. Think of a big corporation that has a lot of subsidiaries across the whole world, and it needs to move money between them. For the corporation itself, the credit risk of moving money between their subsidiaries is zero. You don't worry about your subsidiary receiving some money from your holding company or its sister company. But unfortunately, for the existing banking system, these all counterparties are treated as independent ones, and every single transaction requires a ton of paperwork to support the reason for this transaction. So corporations are actively looking into the solutions to establish a settlement infrastructure between connected companies, so they can seamlessly and on demand, this is a very important subject, on demand transaction, settle the necessary amounts. We live now in the on-demand economy, I would say. It continues to dominate our everyday lives. We order food on demand. We do education and learn on demand. We do whatever other medical payment services on demand. So this is a big part of our lives, and maybe not all you guys realize that, but on-demand economy is something that has been rising quite rapidly, and part of this on-demand economy because it provides on-demand settlement, not in a week time or a month's time as traditional banking system sometimes operates. It doesn't have any weekdays, weekends or bank closed days, holidays. It just transacts 24/7, and settlement happens in just couple minutes. Whether with a traditional system, settlement can happen in days and even weeks. So that's the major advantage, and there are multiple use cases, potential use cases that could be applied to this product once it scales well enough.
Yes, agreed on that end, and I believe the stablecoins are also providing a new infrastructure for the banking services, and decentralized finance has been very useful on this. So, for instance, once you send $1,000 from SWIFT from Turkey to the US, they charge you $50, and the commissions increase by the value as well. And if you did this from the blockchain, it would only cost around 50 cents. And for the same thing for decentralized lending. So in Turkey, for the Turkish lira, overnight interest rate is between 8 to 10%. But if you want to get a loan from a bank, it's between 15 to 20%. And this could be done on a decentralized lending platform at 11 or 12% by the borrower putting collateral on and doing it at 0% default risk rate. So what we're seeing this as well as multiple use cases is that the banking infrastructures are going to be changing in the next 5 to 10 years. And the stable coins and a pair between BiLira and Stasis is going to mimic the rails between the Turkish liras and the euros. And when the time comes, because the smart contracts automatically trigger the transactions, the overhead cost is much lower, and it's going to create lower cost transactions from the banks, and there's not going to be time or border constraints. So what we believe is the blockchain and stablecoin ecosystem is building an infrastructure, and the banks are going to be pulling prices and the services from this new infrastructure to fulfill it for their customers.
Yeah, DeFi market is definitely big, and let me hold a couple minutes maybe talking about that, because the forex trading based on stablecoins is a next huge thing. But let's come back to the borrowing and lending market first. I'm sharing the screen here. This is not an advertisement, but this is just one of the platforms that has literally a CD product. So it offers deposits in hard currency, and the customers could treat it as a replacement to their traditional deposits. And they can deploy capital to this platform to generate some yield on their cash. So here we are showing some of the dollar stable coins that are available on this particular platform. And here is the annual interest rate, which customer can generate by deploying capital to this platform. Now, before you say that the platform is risky and is not insured by any government regulator, I must say that all the loans are 100%, even more than 100% collateralized. And not only that, everybody can see it. So since it's a blockchain, all transactions are recorded and all balances could be monitored on demand. So everybody can check what particular amount of this stable coin or this stable coin or this stable coin is available on this platform. And then what are the assets that back it available on the platform, and then make his own judgment whether these interest rates are reasonable and if they compensate for the risk or not. My personal opinion is that they definitely do compensate for the risk. And they are much higher than one could get in a traditional banking system these days. And this market is just at its infancy, but it will continue to suck in assets. It currently services around 11 billion in assets. It's nothing relative to the traditional banking system, of course, but the industry and the market is very new. It was created last year, but really took off this year during this summer. As you can see, the assets increased 4 times during this summer primarily because of the user interfaces and the convenience that finally became possible. So again, like I said, now anybody can obtain a stable coin backed by dollars, for example, and then using a browser extension or a browser wallet deposit to a platform like this one to generate some yield for his savings. And then the crypto forex use case potentially is one of the most appealing opportunities in the stablecoin world, primarily because it opens up the door for the global remittance applications. Now, if you want to transfer capital from some emerging market currencies, say Turkish lira or Indonesian rupee, into, for example, Canada or even France, that transaction might go through the US dollar first. So Turkish lira will be converted to the US dollar first, and then the dollars will be converted to the Canadian dollar, so the euro. This is the way the global capital markets are set up. That dollar, it serves as the ultimate settlement currency, especially for the financial markets transactions. And the blockchain and stablecoins can finally challenge that when not. And personally, I think this is a very good environment in this particular stage, where United States have been implementing quite loose budget policies over the last couple quarters, and the world is finally looking for alternative to the US dollar. The dollar served as the global reserve currency for several decades, and everybody was comfortable with that. But finally, this is the Minsky moment, as one can say, for the US dollar, where more and more counterparties, more and more institutions, other countries, and even savers are looking for alternatives, looking for a way to diversify out of the US dollar. And in the business like remittance, where the transactional costs are very important, it's finally possible, will be possible if finally it will be possible to transact through emerging market currencies between them directly without dollar intermediary, it will be a significant advantage over this existing monetary system.
Yes, agreed on that. And with the pairs opening between stablecoins, it's going to allow 24/7 transactions to happen, because with Swift, you can wait for a couple of days and the transaction costs are going to be much lower. And on this infrastructure layer, there's going to be one deep pair with liquidity between stablecoins, which then the banks and other intermediaries will trade and enjoy the liquidity there. And as Greg said, now, while these transactions are happening, we're not going to have to touch the dollar, and the transactions are going to be made organically between stablecoins.
Yep. So this is the way. This is the ultimate product where it's going. And by the way, existing forex markets are also not available 24/7. So that will be an advantage over existing markets as well, as blockchain works 24/7 and it's agnostic to a particular time or holiday or wherever whatever time a traditional banking system takes as holiday or days off. Blockchain works alongside internet, and when internet works, blockchain works. So I'm sure some customers experienced different exchange rates if they were sending money abroad or just trading some capital during weekends. So in traders term, it's called widening of the spreads, because, for example, events like currency depegs or dislocations could happen over the weekends, and the market will have to catch up to play them out during the business hours. So if we were to imagine forex market trading on blockchain 24/7, the market will adjust to the information that is available at that particular moment much faster. So that will be another efficiency improvement over the traditional forex markets as they are right now, which, by the way, are not transparent at all. There is no single exchange where currency trade happening. It's just the network between banks that they fill up with quotes in not really transparent manner. And blockchain will definitely challenge and disrupt that.
Yes. And being 24/7 and reaching the customers directly without a trusted central entity is very interesting as well. And I want to talk a bit about Libra Association, which just chose their board members yesterday, and they have started their operations. So Libra is promising to bring different stablecoins or fiat currencies together to create one universal medium of exchange where the people are not tied in to one country's monetary policies, but is split between different currencies. And Facebook and different big corporations are behind this project, and they have the tools that can reach directly to the consumers. So it's going to be very interesting to watch how Libra progresses and how the public and the people decide which currency to use as their both store of value and also as their medium of exchange.
Yeah, Libra case is actually convincing in a way that there is definitely a market for this product, but regulation clearly has to catch up. So multiple jurisdictions lack the proper legal framework to regulate or at least allow these business models to happen. We are watching closely the developments in Europe and across other parts of the world, and our team even has published a book on digital asset regulation globally. There were several editions, one of which was translated into the Turkish language by the Paribu Exchange. So you could grab one from that particular company if you want. It will give you just a clear overview of where the world is going with digital asset regulation. But ultimately, it's the customer who will win if we were to implement this technology at mass. Of course, there are some challenges. For example, the capacity of existing blockchains is totally not supportive of this mass transactions happening in scale. And the closest example here would be the internet itself. If you think of internet back in 1996, 1999, you couldn't do the video streaming back then. I mean, you could, but it would be of very loose quality, and only a few computers were available to decode that. So it wasn't really available for a mass consumer as a technology. Although the internet was there, the product like Facebook and video streaming, YouTube, photo sharing, file sharing were not really possible. So this is exactly where the blockchain is right now in its state of technical development. It works, it secures transactions, it removes the middleman and increases trust of the settlement layer, peer-to-peer settlement layer, but it's nowhere near the capacity that is required for this technology to service the masses just yet. So we are, in a sense, are explorers here with Sinan. We totally believe in the technology and the product, but some development work has to catch up, and the technology has to evolve to allow the mass usage. It's a grain of salt that is still present in this current environment.
Yes. And I'm also curious what you think about the central bank digital currencies, because China just recently started their new pilot program. But I think the bigger question there is whether it's going to be on the public blockchain or on a hybrid use case. And is it going to be touching the end consumer, or is it just going to be a new messaging system between the central bank and the retail banks itself?
Yeah, again, so this is the very right questions. We don't have particular answers at this stage, but if it's a wholesale product only available to licensed financial intermediaries, then consumer will not even face it and will not have a chance to be exposed to that currency. If it's a retail, totally convinced China will run it on some government-approved blockchain, or maybe even not even a blockchain. It will be just a centralized database, which doesn't give much of a preference relative to the existing financial framework and financial networks. So I think in China's example, it's just an instrument to satisfy the demand for digital assets of the population, and it's not really tech savvy and will not go deeper to dig and investigate that's in some sense it's a fake digital asset, which is not really available on demand as something that is like Bitcoin or Ethereum, which anybody can transact with 24/7 and nobody can restrict one from transacting with that particular blockchain. It's the basic constitutional right that is available in developed countries and across democracies around the world. But I have a feeling that China might easily take that away, and its citizens will be okay with that.
Yes. Yes, I agree on that as well, where China is trying to do a more controlled version, whereas both the public stable coins like Stasis or BiLira is going to be living, coexisting together with potential central bank digital currencies as well. But it's going to be very different for each country, where every country's high level decision on the control they want to grasp is different. But nonetheless, it's an exciting new era coming up, and the banking infrastructure is changing in the next 2 to 5 to 10 years. And we're going to see which one the end consumer is going to adapt to their daily life.
Yep. But it's very important to self-educate, to be aware of the ongoing developments. I'm posting a link now to the book on regulation that was republished by Paribu team. I really encourage everybody who is interested in this subject to take notice and to learn about the existing developments in the regulation space to better understand what the future holds for us in this exciting marketplace. I mean, in Turkey, there was always a demand for a dollar alternative. And I think Turkey is one of the countries that has been driving the demand for the new sort of or alternative hard currency. Euro is obvious candidate, but who knows, maybe some other currencies will emerge as the better savings and transactional cross-border transactional capacity for Turkish people. And I'm really looking forward to work with communities that we established in Turkey. Even Stasis has already a couple thousand people out of Turkey in our community. We've got the Stasis wallet, which is a convenient application to manage the stable coins on chain, to move them around, buy and sell, and swap into other digital assets like Bitcoin and Ethereum. So the market at this stage definitely needs an alternative, and the existing dollar stable coins, for the bigger part of them, are not providing the level of transparency as emerging players like Stasis, for example, or BiLira. So the market needs to evolve, the product offering needs to evolve, and then at the end of the day, it's the consumer who wins and who differentiates between better structured products and the ones that will slowly fade out of existence and maybe be replaced by some better alternatives.
Yes, agreed. And thank you for your detailed contribution. And we both believe that the new infrastructure is going to be based on the blockchain and stablecoins and pushing for it. And it's going to have both an infrastructure layer and a consumer touching side. And as you said, self education is very important in this space to understand why does this decentralization messaging system matters for us and for the change of the world.
Yep, I totally agree. And this is why Sinan and I are members of a Stablecoin Alliance. It's basically an organization that supports the non-dollar stablecoin initiatives around the world, and we cherry pick the best projects and unites them in a way that helps do the business development and the consumer development and the product development in a better way to shape the product offering across different parts of the world to a common standard, so to say. So we're very excited to be a part of it, and this is not probably the best time to announce something, but just keep an eye on the stablecoin term and the stablecoin news across the world, and just very excited about it and looking forward to develop this niche.
Yes, thank you for your thoughts and thank you for your time today as well. I think it was a very productive session. And if anyone wants to learn more about stablecoins, they can reach out to Greg or myself as well. And thank you everyone for listening.
Yep.